We had just under 300 million of credit provisions, which takes our total for the first half at 900 million, which is about 12 times higher than the average over the last 10 years. So in historic terms, it's still a very big number. But if you look at our credit book, it's actually a very solid credit book. Out of our 300 billion roughly of loans, over 80%, I think it's 84%, is actually collateralized. 60% of that loan book is in Switzerland, where the credit loss history is quite robust. So we obviously, as a US GAAP reporter, followed all the CECL macroeconomic modeling, but given that we were already provisioning almost 600 million in the first quarter, that really brought us to this roughly 900 million for the first half.
So as we look at the outlook on that provisioning, is it your expectation that we have seen the peak of the crisis now and you would expect there to be less provisioning over coming quarters?
Well, the way that CECL works on the US GAAP is that you obviously have to reassess your macroeconomic assumptions every quarter, and we have to see now how these forecasts will develop over the next few quarters, so it's difficult to make a prediction. But directionally, I think we have now factored in our best possible way to forecast the impact of COVID-19 on macroeconomic development going forward. So in theory, we should expect lower credit provisions going forward, unless, of course, the macroeconomic assumptions change to the worse, which we all hope will not happen.
So in terms of profitability and the outlook for return on tangible equity over the second half of the year here, how much better than the 11% you've delivered here can you do?
Well, it's very difficult to make short-term predictions over the next 2 or 3 quarters, as you can imagine, because nobody really knows what COVID-19 will ultimately produce over the next few quarters. Will there be a vaccine, etc.? But we made 12% return on equity over the first 6 months. We made 10.4% over the last 4 quarters. So I will not make any predictions for the second half. Usually the first half is stronger than the second half, so we'll have to see how things develop. But our midterm targets are unchanged. We want to deliver 10 to 12% return on tangible equity through the cycle. And after all the work that we've done over the last 5 years, we are now, I think, in a position where we can deliver that.
One of the trends that your predecessor introduced, I think, as a consequence of the world post the financial crisis was a continued de-risking of a reduction of risk-weighted assets. As we look at the earnings announcement today, you have continued that with the reduction of risk-weighted assets. Is that going to continue from here on in? Tell us a little bit about the direction of travel for those assets.
Yeah, our risk-weighted assets were broadly flat between the end of the first quarter and the second quarter. And you have different things. You have business growth, you have volatility, you have model changes. So the direction of travel, has been up, as we saw, because even though we reduced our overall leverage and balance sheet over the last 5 years, risk-weighted assets went up and our risk density went up. So, and there will be at some point, Basel III introduction of FRTB, etc., which will come in 2023. So the direction of travel is up, but we are also now generating capital through profitability, and therefore our midterm target of a CET1 ratio of 12%